Peruvian Central Bank University Extension course, Economic Terms Part 1. My name is Leonardo Palacín Bustamante, and I'll be showing today 10 important terms that are frequently used in this exam. White noise. It refers to a sequence of random variables with a mean of 0, a constant variance, and no autocorrelation. In simpler terms, it's a random fluctuation that cannot be predicted or explained by past data and has no discernible pattern. Examples. When modeling stock returns, the residuals are often assumed to be white noise. When analyzing GDP data, we found that the fluctuations were random and consistent with white noise, with no discernible trend. Purchasing Power Parity, PPP. It is a macroeconomic measure used to compare productivity and living standards across countries. It calculates the exchange rate needed to convert one country's currency into another to buy the same basket of goods in both nations. Examples. Number 1. According to PPP, the euro should appreciate against the dollar because goods in the Eurozone are currently cheaper than in the US. A $10 book in the US should cost 9 euros in Europe if the PPP exchange rate is $1.11 per 1 euro. Price to earning ratio. It is a financial metric that compares a company's current share to its per share earnings. It is used by investors to determine the relative value of a company's shares, indicating how much investors are willing to pay per dollar of earnings. Examples. Number 1, the company's price to earning ratio of 15 suggests that investors are willing to pay $15 for every dollar of earnings. A high price to earnings ratio can indicate that a stock is overvalued, while a low price to earning ratio might suggest the stock is undervalued. Convenience yield. It refers to the benefits of holding a physical commodity rather than a contract or derivative based on the commodity. These benefits can arise from having immediate access to the commodity during times of scarcity or uncertainty. Examples. Number 1. A company offers convenience yield if it's storing oil so that they can sell it quickly during a supply disruption. Holding physical gold during a supply shortage could provide a convenience yield. Earnings per share, EPS. EPS is a measure that shows how much profit a company makes for each share of its common stock. It is calculated by dividing the company's net income by the total number of shares. A higher EPS means the company is seen as more profitable. Example number 1. A company with $10 million in net income and 5 million shares has an EPS of $2. The company's EPS increased from $1.50 to $2, reflecting its higher profitability this quarter. Helicopter money. It refers to a form of unconventional monetary policy where the central bank directly increases the money supply by distributing large amounts of money to the public, typically to stimulate the economy during deflation or recession. Examples. Number 1, in response to the recession, the government enacted helicopter money by sending direct cash payments to citizens. Number 2, economists debated whether helicopter money could cause inflation after the central bank proposed a mass distribution of funds to households. Fed tapering. It is the process where the Federal Reserve, that is, the U.S. Central Bank, gradually reduces its monetary expansion efforts which were initially introduced to stimulate the economy. This involves decreasing the purchase of financial assets, such as asset-backed securities, as the economy shows signs of recovery. Examples: the stock market reacted negatively to the Fed's announcement of tapering its bond buying program. Number two, as inflation rose, the Fed began tapering its quantitative easing measures to prevent the economy from overheating. Fiscal cliff. It is a situation where scheduled government spending cuts and tax increases are set to occur simultaneously. This can lead to a sudden reduction in the federal budget deficit, but also risks harming economic growth if not addressed promptly to prevent a potential financial crisis. Examples: number one, the country faced a fiscal cliff when temporary tax cuts were set to expire, leading to concerns about a sharp economic downturn. Number two, if Congress doesn't act, the automatic spending cuts next year could send the economy off the fiscal cliff. Operation Twist. It is a monetary policy used by central banks, especially the Federal Reserve, to lower long-term interest rates by simultaneously buying long-term government bonds and selling short-term bonds. This strategy helps flatten the yield curve and stimulates the economy when other traditional monetary tools are insufficient. Examples: the Federal Reserve launched Operation Twist to reduce long-term interest rates and encourage investment. Through Operation Twist, the Fed hopes to boost the housing market by keeping mortgage rates low. Strike price. It is the fixed price at which the holder of an options contract can buy or sell the underlying asset or security. It is a crucial element in options trading because it determines when the contract becomes profitable. Examples: number one, an investor exercised his call option at a strike price of $50 when the market price reached $60, profiting from the difference. Number two, the strike price for the put option was set at $30, allowing the investor to sell shares at that price, even if the market value dropped below it. This is English applied to economics. Thanks for watching.